Let's get more details on the market performance, and this time from a global and local perspective with Kyle Burgess, Portfolio Manager at Nedbank Private Wealth. Always good to have you with us, Kyle.
Good to see you again, Gugu.
Happy Friday. You are lucky charm, right? Is it you or Naspers?
So I'm pretty certain it's Naspers. But yeah, speaking of which, it's up well above sort of 8% for the week, which is quite incredible. And I mean, if you look at it from the beginning of the year, that's 57%, which is quite extraordinary, and even more extraordinary if you look at how big the company is. So that's really been driving the market at the moment. But there have been quite a few. It's been a very strong week for the all share in general. So that's up over 3%, which puts us over 13% for the year. So I can tell you that I certainly wasn't telling clients to expect 13% or more going into this year.
Exactly.
So that's great. But yeah, a lot of factors at play, and of course the rand weakening quite a bit, which I think a lot of guys would have probably sort of foreseen coming. But yeah, not all sort of green arrows, unfortunately, this week. Retailers have pulled back a bit, which is expected given the weaker rand. Speaking
of the market performance, I mean, this is a fantastic entry into the last quarter of the year. I think last year this time we were facing, post-Brexit issues. We're still looking forward to perhaps not Trump being elected as president. So increased levels of volatility. But could this market drive be sustainable, especially given Naspers? I mean, if anything happens in China, we know what the influence is there.
Yeah, absolutely. I don't think it's I don't have a lot of faith in it. It is a bit of one of the softer bull markets because it is being driven by, particularly Naspers as well as Richemont. We've seen some of the rand hedges that are also pushing it up. And I mean, we've spoken about it before on the show that there's a lot of high quality blue chip stocks that, are down 30-40% on the year. So there's still a lot That being said, if those sort of companies start to re-rate, you could probably see, the all-share index at 62, 63,000 if those, had to claw back gains. But
sure,
that's a tough ask. So we're on a bit of a knife edge at the moment, and I think that it's not unexpected given the fact going into December as well. So yeah, it's going to be an interesting last quarter, that's for sure.
Clearly, you're not making any bets at the moment if Naspers will reach 4,000 by the end of the year.
No, I'm hoping, but no bets being made.
No bets being made, but certainly crossing fingers. What about the international influence? We mentioned U.S. jobs numbers expected to be released today, but there's also been a lot of conversations regarding U.S. governors as well from the Fed.
Yeah, so just having a look at that, there's not, I think, a lot of consensus around who will actually take over that. We must also remember that Janet Yellen, she could potentially run for a second term. That seems quite unlikely at the moment. Kevin Walsh seems to probably, well, according to the bookies anyway, seems to be the leader of going into this sort of race, and he's been quite outspoken against these sort of unconventional monetary policy reforms that we've seen going, from the financial crisis. So, on top of that, you've also got the Fed going into sort of they're trimming their balance sheet, which is sitting at the moment at a tidy $4.5 trillion. So it's not an easy time to be taking over as Fed Reserve Governor going into early next year. I think they'll be taking over, excuse me. But yeah, so certainly not easy, but that's kind of what we're facing in the US at the moment.
I want us to touch on Lonmin and some of the technicalities. I mean, a lot of the headlines say Lonmin share price significantly firmer today by more than 18%, but this bank covenant waiver, what is that and what does it mean?
So basically, when I think banks lend companies money, they need to hold certain things in their business. So they need to make promises to the bank to keep at certain levels. So one of these covenants would be that Lonmin needed to keep their net worth at 1.1 billion US dollars. Sorry, 1.4 billion US dollars, which they've currently waived. Sorry, it was $1.1 billion.
Okay.
They're sitting at 1.4.
Big numbers, so it's understandable.
Yeah. So they're sitting at the moment at 1.4. If they were to draw down on additional facilities, that would have obviously taken that net worth lower. So what they've done is the banks have waived that, which essentially allows Lonmin to be buying out the Pandora, the sort of remaining stake that they don't own in Pandora, and effectively mine that from the adjacent Safi shaft. And of course, this all sits in that Marikana strip. So that's what the company's essentially been re-rating on the back of, which is quite positive. I think Lonmin shareholders would have taken quite a lot of punishment over the last sort of 18 months. The platinum price hasn't been supportive, so I think this is a sort of a bit of a sparkle, at the end of the tunnel.
At 15-16 rand though a share, would this be a great buying opportunity given, I mean, where Lonmin used to be in its heydays?
To be honest with you, I've been calling resources wrong the whole year, probably for the last 18 months. So I'm hesitant to sort of give you an answer on that. But, you know, I think if you're looking at platinum counters, I like the idea around platinum counters. And Lonmin looks to be a fair bet. In terms of valuations, I sort of don't really have my finger on the pulse of that right now. So I wouldn't be able to tell you.
Well, yeah, it's a tough one on resources and, of course, changes, especially when there's lots of dynamics and moving parts. I also want to get your perspective on Old Mutual, letting go of a few assets in China as well as Latin America specifically.
Yeah, so, you know, earlier we saw them selling down their asset management business in the US, and I think this kind of forms part of that, really just refocusing their business to South Africa and London. And, you know, I think a lot of shareholders will be waiting for that value unlock, especially with the unbundling of Nedbank potentially in the pipeline. So, you know, at 40 Rand a share, it was looking very attractive. It's certainly pulled back from those 40 Rand levels, and a lot of shareholders waiting for sort of value unlock. So as a shareholder, it does look like an attractive proposition, I think, at the moment.
Very briefly, I can't let you go without talking about Vodacom. Share price under pressure this week, and of course we saw the headlines regarding some interesting government contracts which were concluded. Yeah,
so I don't know if I don't have enough information. There's obviously just the information that's out in the press, but I think if you have to look at potential consequences, you know, you're probably looking at about a fine of potentially 10% of revenue.
Sure.
This is obviously looking way into the future, and there's not enough information but if you have to look hypothetically at consequences, that would probably be one of them. So not an ideal situation, but we'll certainly wait for more information to come out on the back of that. But in the sort of interim, we'll enjoy lower data prices.
Lower data price, exactly.
Vodacom subscriber.
Fingers crossed that is maintained and something that can be carried through into the future.
Let's hope so.
Always a pleasure speaking to you, Kyle, and wishing you a wonderful weekend. That was Kyle Burgess, Portfolio Manager at Nedbank Private Wealth, updating us on the local and global market space.